Hey everyone, welcome back to Corporate Decoder. Today we're diving deep into a financial report that shows how some of Kensington's funds performed. It's packed with numbers, and we're going to cut through the jargon to find out what's really going on. So if you want to see how investment companies actually perform beyond the headlines, you're in the right place. Before we jump in, if you want more of these unvarnished looks at corporate filings, make sure you're subscribed and hit that notification bell. We also have a growing community on Discord. Check the link in the description below to join the conversation. This filing is a certified shareholder report for registered management investment companies. Think of it as a look under the hood at how certain funds are doing. It covers the period up to June 30, 2025 and gives us a snapshot of their performance and holdings. Let's start with the Kensington Active Advantage Fund, specifically the Class A shares. For the first 6 months of 2025, the costs for a hypothetical $10,000 investment were $81. That's about 1.60% of the investment. They reported total net assets of $28,560% of the investment. They reported total net assets of $28,504. FALV $1 was quite high at 144%, meaning they bought and sold a lot of their holdings. When we look at what they invested in, it was mostly exchange-traded funds at 62.3% and open-end funds at 37.8 and 117,000, 16,000, and the portfolio turnover was quite high at 144%, meaning they bought and sold a lot of their holdings. When we look at what they invested in, it was mostly exchange-traded funds at 62.3% and open-end funds at 37.4%. Among their top holdings, we see the Vanguard S&P 500 ETF making up 16.8% of the fund, and the Invesco QQQ Trust Series 1 at 23.5%. This tells us they're heavily invested in broad market indexes, particularly those focused on large growth companies. Next up, the Kensington Managed Income Fund, also Class A shares. Similar to the Active Advantage Fund, the costs on a $10,000 investment were around $80, about 1.60%. This fund is much larger with net assets of $776, $180, $139. Their portfolio turnover is a bit lower at 120%. Looking at their investments, it's split between exchange-traded funds and open-end funds, both around 50.3%. Interestingly, a significant chunk here, 18.3%, is in the iShares Broad USD High Yield Corporate Bond ETF. This suggests a focus on income generation through higher risk bonds. The top holding is actually the American High Income Trust at 19.7%, reinforcing that income focus. Now for the Kensington Dynamic Allocation Fund, Class A. This one reported costs of $91 on a $10,000 investment, or about 1.63%. Net assets here are substantial at 930%. This suggests a very active trading percent. 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 This suggests a very active trading strategy. They're heavily invested in ETFs at 77%, with a significant portion in growth-oriented ETFs. Leading their top holdings are ETFs like the Vanguard Mega Cap Growth ETF at 10.2% and the Vanguard S&P 500 ETF also at 14.7%. The fund also saw a name change from Kensington Dynamic Growth Fund to Kensington Dynamic Allocation Fund, effective in April 2025. Moving on to the Kensington Defender Fund, institutional class. Costs here were $76 on $10,000, about 1.49%. Net assets are $73,953 with a portfolio turnover of 19.4%. Net assets are $73,000 with a notable 23.4% in what's called investments purchased with proceeds from securities lending and 13.4% in private funds. This private fund investment, the Galaxy Plus Fund, Kensington Opportunity Offshore Feeder Fund, is a significant one at 13.4%. The report mentions it's a way to invest in various alternative strategies. The fund also discloses a distributions being a return of capital, which means investors are getting their own money back, not profit. Finally, the Kensington Hedged Premium Income ETF. This one had the lowest report, 95%. Net assets are $147,000 or 0.95%. Net assets are $147,000 or $7,630,088 on top percent, with some option strategies layered on top. Now, let's dig into the really interesting part, the actual holdings. For the Kensington Active Advantage Fund, the top holdings are dominated by ETFs like the Invesco QQQ Trust Series 1, valued at over $6.7 million, and the Vanguard S&P 500 ETF at nearly $4.8 million for an $8 million NABIA High Yield Bond Series, makes up a significant $10.6 million, which is over 25% of the fund's net assets, a point the report flags specifically. In the Managed Income Fund's schedule of investments, we see a heavy concentration in bond ETFs, with the iShares Broad USD High Yield Corporate Bond ETF alone valued at over $142 million. This fund also uses investments purchased with proceeds from securities lending to the tune of over $121 million, which is quite a large portion, almost 16% of their total net assets here. For the Dynamic Allocation Fund, the holdings are very ETF heavy, with the Invesco QQQ Trust Series 1 valued at over $91 million and the Vanguard S&P 500 ETF at over $130 million. The fund also has nearly $33 million in futures contracts, specifically on the NASDAQ 100 index, and the S&P 500 ETF at over $37 million in futures contracts, specifically on the NASDAQ 100 index and the S&P 500 index, are showing they are actively using derivatives for exposure. The Defender Fund, on the other hand, also holds the Vanguard S&P 500 ETF, but it's a smaller piece at 25.4%. A substantial portion, 13.4%, is in that private fund we mentioned earlier, the Galaxy Plus Fund, valued at nearly $9.8 million. The fund also uses options contracts with significant notional amounts for both purchased and written options on the S&P 500 index, and the Hedged Premium Income ETF is almost entirely invested in the Vanguard S&P 500 ETF, making up 100% of its holdings. This ETF also uses options, with call options purchased totaling over $2.7 million and put options purchased of over $1.2 million. They are also writing call and put options, which can generate income but also carry risk. Looking at the overall financial health, the Kensington Active Advantage Fund had total assets of about $28.5 million and total liabilities of just over $63,000. The Managed Income Fund is much larger, with total assets of over $904 million and liabilities of just over $17.8 million, and liabilities of roughly $12.1 million, and liabilities of just over $17.8 million. Finally, the Hedged Premium Income ETF has assets of around $159 million and total liabilities of nearly $128 million. The Dynamic Allocation Fund shows total assets of over $904 million and liabilities of roughly $12.1 million and liabilities of roughly $12.1 million. It's interesting to see the difference in scale between these funds. Across all the funds as of June 30, 2025, the Kensington Active Advantage Fund has $28.5 million in net assets. The Managed Income Fund has a substantial $776 million. The Dynamic Allocation Fund leads the pack with over $1936 million. The Defender Fund holds about $73 million, and the Hedged Premium Income ETF has nearly $14.8 million. And the Hedged Premium Income ETF has nearly $148 million in net assets. The Managed Income ETF has nearly $48 million, and the Hedged Premium Income ETF has nearly $148 million. And the Hedged Premium Income ETF has nearly $148 million, and the Hedged Premium Income ETF has nearly 48 mil. The expense ratios are pretty telling too. For the Active Advantage Fund, after waivers, the expense ratio is 1.35%. The Managed Income Fund's institutional shares also come in at 1.35% after waivers, while its A shares are 1.63%. The Dynamic Allocation Fund institutional shares are at 1.49%. The Hedged Premium Income ETF stands out again with a very low expense ratio of 1.39%. The Hedged Premium Income ETF stands out again with a very low expense ratio of 0.95%. It seems Kensington tries to keep costs down, especially on their institutional shares are at 1.49%. The Hedged Premium Income ETF stands out again with a very low expense ratio of 0.95%. It seems Kensington tries to keep costs down, especially on their institutional share classes. When we look at the statements of operations, we can see how much each fund is earning from its investments before expenses. The managed income fund generated over $23 million in dividend income, and the dynamic allocation fund brought in over $9.7 million in interest income. This breakdown helps us understand where the earnings are coming from. The report also touches on the approval of advisory agreements, which is pretty standard for these filings, but it does give us insight into the board's review process. They considered the services provided historical performance, costs, and economies of scale. For the managed income fund, the board noted it underperformed categories and benchmarks in many periods, although it did outperform over 3 and 5 years in some instances. Similarly, the dynamic allocation fund underperformed benchmarks and categories for most periods presented, though it did achieve positive returns in some longer-term measures. The Active Advantage Fund and Defender Fund, being newer, had less historical data, but the board felt they were reasonably well managed. The net assets at the end of June 2025 show the Managed Income Fund at $748,984,000 and the Dynamic Allocation Fund at $908,136,000. These are significant amounts showing substantial investor confidence in these funds. Overall, so what's the story here? We're seeing a mix of strategies across Kensington's funds. The Active Advantage and Dynamic Allocation funds seem to be leaning heavily on ETFs and have high turnover, suggesting a more dynamic, possibly short-term approach. The Managed Income Fund, as the name implies, is clearly focused on income, with a big bet on high-yield bonds and related ETFs. The Defender Fund is a bit more unique, incorporating private funds and options, aiming for capital preservation and total return, and a hedged premium income ETF with its very low cost and high concentration in the S&P 500 ETF plus options appears to be a more straightforward income-focused product. The high turnover in some funds, especially the Dynamic Allocation Fund at 340%, could mean higher trading costs which might eat into returns over time, which is something investors should always keep an eye on. The consistent expense waivers and limitations, particularly for the institutional classes, show an effort to manage costs for investors. On the whole, these funds are professionally managed, but the performance reviews suggest that not all strategies are hitting the mark consistently again. Alright, that's our deep dive into this Kensington Funds filing. What are your thoughts on these investment strategies and their performance? Let me know in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe for more. And don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and I'll see you in the next one. Kia ora, and I'll see you in the next one. Kia ora, and slacks.